Good morning, friends and fellow traders. This is Doug Campbell with Right Way Options, coming to you with the Friday edition of the morning market preparation video for March 16th, 2018. Guess I'm a day late and a dollar short again. Looking at the overall market here, there's some good and there's some bad. And let's start with the good here. Now, the good is that looking at the spiders here, we're holding above this downtrend line. Okay, holding above this downtrend line. We're holding above the 50-day moving average. Hanging on there, just clinging to that 50-day moving average, hanging on there. So that's positive, and we are still in a current uptrend. Our uptrend is still holding here. That's what we want to see, in an index. Just some of that positive things happening here where we could hopefully get a bounce. Let's take a look at the Qs. And Qs are just, what a beautiful chart, incredibly strong, breaking out to new highs, pulling back to test support, holding above its trend line. Everything is looking good here for the Qs. We just need a little bit of love to come into this market. So let's put this in the good column for the market. Let's take a look at IWM. Now, IWM has been definitely pulling back. The possibility that this was a double top resistance level is certainly there. But let's also keep in mind that we're still holding this uptrend in the market. We're holding above this major support level in IWM, and we're still well above the 50-day moving average. And notice all of those other moving averages are coming up to create a convergence right in this support area. So I'm going to put this in the good column as well. We're holding up, at least for the moment, pretty well here in IWM. So let's take a look at the bad. The bad is the diamonds. The diamonds are being drug along. They just don't want to move. It's like trying to lead a dog that isn't leash broken, and you're just dragging that animal up the street because they do not want to walk on a leash. And that's kind of what's happening here in the diamonds. It just does not want to participate here at the moment. Yesterday, it looked like we were going to make an attempt to hold above that 25,000 mark, and we came really close to that. And then by the end of the day, more selling came in, more pressure on the market, and we pushed back down. But here, it's not all bad. Okay, here's some good. We're still holding this uptrend in this wedge. So we've got higher lows here, and if we can hold a higher low here, that could turn into, obviously, higher high. So let's watch and wait before we get real panicky about this. Now, where we are right now, here's the problem that we do have. It wouldn't take a whole lot of additional selling. It wouldn't take a whole lot of pressure, another news event or fears, trade wars, whatever it is, to push this down and break through that support. Now, I know the Dow is only 30 companies, and it doesn't necessarily have to affect the other indexes, but it often does. When that pushes down like that, some panic will set in, possibly in the other indexes, and we could see some selling there. So we need to kind of stay focused here a little bit on the diamonds and the SPY, because the SPY is setting right on that 50-day moving average. We need those to hold. So come on, bulls, let's dig in here, show some horns, and let's push off of this low area. Otherwise, we could see a little bit of a problem. Now, it's also very possible that we could just slip into a very light volume, choppy price action as we chop this sideways in this wedge. Now, choppy price action can be kind of challenging. It can be kind of dangerous for inexperienced traders because we get bored and then we force trades. If we do slip into that chop, look at that as a bullish sign because the bears aren't taking us down. And all we would have to do then is just watch and wait for that, either that break higher or that break lower. And it wouldn't be all that much of a surprise if we did chop a little bit, just because next week we have the FOMC meeting and their rate announcement on next Wednesday. So if the market does seem a little bit stale, it could be just waiting for that FOMC. We've been really sensitive to any interest rate news. Possibly we're just going to pause here while we wait for that data to come out next week. I don't know. So currently, if we take a look at the VIX is holding right around this price support area. It's holding right around that 50-day moving average. But we're definitely downtrending. And so there's nothing here in the VIX that gets me overly concerned at the moment. There's no clues of just a major spike in volatility, but we'll have to keep a close eye on it because it could move pretty quickly in either direction, depending on how the market responds this morning to those support levels. Let's take a quick look at T21. 22. T21-22, the 4-week new high, new low ratio. I suggested earlier this week that we were up here in this bearish reversal zone and that we could see a little bit of selling or a little bit of a pullback. Or rest is what I said. And we certainly have had that, just this light resting pullback, and that's moving us back down here toward this bullish reversal zone. So that 4-week new high, no low ratio is nothing fancy about that, and we can certainly be down in here and bounce around for a while. We don't necessarily have to turn around and come right back up, but it is a little bit of encouraging that we've moved this mark so far in just a few light days of pullback. Where we could actually see the bulls stepping in and providing a little push higher. Let's wait and see. But right now, we're looking pretty good here on this, moving toward the favorable side of a little bit of a bounce. Let's go back here and take a look at the economic calendar today. On the economic calendar this morning, we have housing starts, industrial production, consumer sentiment, and the jobs report. Housing is expected to pull back. The starts are expected to pull back a little bit, as well as permits, but stay relatively strong. So I don't know how the market will view that this morning, but it should hold up pretty well. Industrial production is expected to maintain some good strength, and consumer sentiment is expected to pull back just a teeny tiny little bit, but still remain very, very strong overall. And of course, jobs are still holding very steady. Lots and lots of jobs out there, folks looking for those. Employers looking for employees. There's a high number of jobs available out there. So it shows strength in the economy. Today, keep a real close eye as we move toward that open. We've got kind of a flat to just slightly bearish look at the market at this moment. And that could change dramatically once we start getting those reports. So kind of keep an eye on that. We don't want this to really start selling off strongly. So watch that closely. Watch that SPY 50-day moving average. If we start losing some of these important key levels, we could have a little bit of trouble with Friday here. So come on, bulls, let's dig in. Let's fight. Hey, everyone, if this is the first time you've seen this information, please do me a favor, click that subscribe button on YouTube and click the follow me button there on Facebook if you happen to be watching it there. Click those thumbs up buttons. Those help me out a ton, guys. It helps the algorithms of those various programs to show the video to more people. I do appreciate that. And also, if you feel the video is worthy, drop a note. I really appreciate those comments. You guys have been very, very kind. Thank you very much. Also, always feel free to share this information with any friends and family that might feel that you might feel would be helpful to them. Everyone, I want to wish you a fantastic day and even a better weekend ahead. Take care of yourselves, and I will see you all bright and early Monday morning. Have a good one, everyone.